Folks, have you seen what's going on in the pharmacy space? Well, great news. We have Ulysses from MacroEdge, a key analyst, highlighting what is going on in the pharmacy space. Why do we have to pay attention? And why might now be a time for a disrespectful offer? Ulysses, I love the report. I love what you do. I follow you on X or Twitter because you are in the muck, in the mire, and you are doing really deep research. Why don't you tell us about your latest piece, and then we will pull it up.
Yeah, thank you very much for having me back. And I had done a report back in 2023 for MacroEdge, specifically on the retail triple net space that is occupied by pharmacies like Walgreens, Rite Aid, CVS, and the trouble that is basically facing that entire industry of the three giants in the space. And we've now, since I put that report out, looking for more triple net vacancies, seen 3,257 stores close in
Wow.
that time frame. So I just published another report, basically highlighting where things are standing and how that pace is not slowing down. Um,
Yeah.
Obviously, Rite Aid has filed bankruptcy twice since I published that report. Uh, this latest time around, I'm not sure what's going to happen, but they'll probably be sold off for parts,
Yeah.
which I think is probably the best thing to happen both for that company and its shareholders.
Yeah.
And then, of course, Walgreens just announced that they're being taken private by Sycamore Partners at the end of this year. And Sycamore Partners has a track record with retail, but they're probably going to do a lot of the same thing where they're going to look at those spaces as how can we reposition this brand and turn it into something that's profitable rather than
Yeah.
the slide that it's been on for almost a decade.
Yeah, it's really interesting because as somebody who's in the real estate game, obviously very much more multifamily, I do have a couple of kind of office or retail spots that I picked up during the last crash. What I always think is interesting is these stores are just almost white elephants if they're vacant, right? If you ever drive by a strip center and there used to be a Walgreens or a CVS
Right.
or any of those, they're just massive rectangles. And if you are a triple net holder and you get one of these, sorry, we're not going to renew or we're canceling, it is really, really tough to release. We actually had a Rite Aid really close to where we live in Mountain
For
View that
sure.
closed, and it was a vacant building for almost a year. Ultimately, being repositioned into a gym. Right? In that case, that became a
Oh, okay.
gym. But this is really an opportunity for folks because again, triple net's also pretty interesting, right? As interest rates went lower, obviously cap rates got compressed. So you were probably buying these triple nets with a 4 cap, 4.5. Now you can get that in a money market account. So
Right.
I think there's a lot of people who are in these deals that frankly probably need to get out. And I think that's kind of one of the things that you're highlighting is, hey, if you could be a turnaround specialist or buy it right, there's some good opportunities. Yes.
Absolutely. So if you were to just use Crexy.com and do a search, which I did for my latest piece, there are 1,447 of these triple net spaces for sale in the United States. Now,
1,447.
yeah, there was a handful
Wow.
in that search, that did not fit the bill, but the majority of them were the triple net spaces for them.
Wow. Very,
And one
very
of the
good.
interesting things that I have always thought about this industry is they used the real estate as their way to roll up businesses. It was almost like their Burr method only. Instead of the constant refinancing, they um, built a new building, a new
Mhm.
triple net, sold it, rented it back, and then they just went and used that money to go build another one. And they just kept doing it over and over and over. But in the late 20 teens, they got to the point where there were literally more stores than there were cities with their investment criteria in the United States, which is 10,000 people. So when you talk about flooding the market uh,
Yeah.
with this type of property, this is sort of, in my opinion, it's a textbook version of that.
No,
So you got
yeah, it's really interesting. I mean, you know this, and I've seen it over the last 25 years. When a model works, people just keep leaning in and
yes,
going until it explodes, right? That's why they call
oh,
it the
absolutely.
bubble popping. So, yeah, if you're building so many stores that you have more stores and you have cities that meet your criteria, y'all better slow down because you're going to run into a
Yeah,
wall. That's just not a good
right.
idea.
And then, they did, and it's been kind of a slow decline. Back in 2017, Walgreens was going to acquire Rite Aid. That deal
Mhm.
was blocked by the United States government. So obviously that didn't go through. They did buy a bunch of Rite Aid stores at the time, but fast forward, even CVS is closing stores in mass. They've just closed, 1,150 of those 3,200 stores.
Wow.
So they're not doing much better. And when you think about what their business has become, right? This was sort of like the ultimate roll up. They conquered the market. Uh,
Hmm.
they had a monopoly on the drugstore business.
Correct.
These three companies, but now you've got uh, the modern mail order catalog, which is the internet.
Yep.
So a lot of what you could buy, obviously in Walgreens, CVS, Rite Aid, as a convenience, you can now buy online. I think Jeff
Yeah. Same
Bezos
day
has probably
shipping,
taken,
next day shipping. Yeah. It's,
yeah, a lot of their business. And then, of course, what we've seen in the last 5 to 6 years in the beauty industry, right? Ulta Beauty alone has captured a lot of what at least Walgreens had as some of their business.
yeah.
And then, of course, there's options now for even pharmaceuticals, right?
Hmm.
Mark Cuban's heavy in that space, cost plus
Yeah.
drugs.
Yep.
Uh, we hear about both from the current president. We've heard about it from the last president. It's a hot topic in the United States as far as pharmacy drug costs.
Hmm.
And so there's going to be more shakeup in the industry in general, in my opinion. So you're looking at three, basically, they're dinosaurs. And I
Yeah.
don't know how they survive in their current format.
No, I think your piece. We'll pull up your piece now, but I think you're really highlighting both pain and opportunity, right? One of the things I try to do on
Yeah,
my channel is highlight where there is pain, but also remind folks that that might be the time to strike, especially if you're an operator who can find a way to reposition these spaces, maybe even
correct.
lease ahead and things of that nature. But I'm going to pull up your piece. You can walk us through it. Um, there it is. Why don't you tell us what we're looking at?
Sure. So this was at the time of the original publication in MacroEdge. This was just a list of announced store closures and how many what the average square footage is, the number of units, and so the total square footage.
Okay.
So uh, in the third quarter of 2023, there were 68 million square foot of planned closures for the
Wow.
year in retail. And part of this was just looking at, you know, everyone has sort of stopped talking about the retail apocalypse. And yes, there have been, especially, some strip centers that have performed really well. But overall, big retail is still struggling and it's an evolving industry right now. So, to your point about where there's pain, there's also opportunity, in particular in these triple net spaces. Now, a lot of these, they've been getting, notices for the last 2 years. So I'm going to scroll down through here. Um, I was just looking at, some basics: Walgreens, Burger King, Best Buy, Boston Market, Hardee's, Steak and Shake, and CVS.
Hmm.
Of their announced closings in 2023, you're talking about $6 billion in potential sale value
Wow.
in store closures. So again, lots there. Now, Burger King's another one. There's a lot of empty Burger Kings out there.
Hmm.
Uh, the franchisees have had a lot of trouble over the last couple of years, but in that, there's opportunity for somebody to go in. Maybe the store's been sitting vacant for 2 years, 3 years. Uh, Whoever owns that triple net might be happy to get some type of a creative lease or sale deal.
No, I think this is just such awesome information. It's kind of pulling together what's happening on the ground, but it also is pointing at opportunity. Again, a real life example near me. It's not a Burger King, but it's a Carl's Jr. Literally walking distance from my house in Mountain View. It's been closed or vacant for 2 years. To your point, somebody owns that, right?
Right.
And it was probably a triple net that somebody owns, and they're paying taxes, they're paying insurance, they're maintaining the trees, they're making sure it doesn't get broken into. And if you can find a space that is empty, not being used, that is the time to strike, right? That is
Yeah,
when there's the
100%.
most pain. It's not when it's leased, right? When it's leased, it's a
Yeah,
cash
right.
cow, right? So it's go find that vacant property, figure out a way to reposition.
Yeah, especially with some of these where they've been empty for a couple of years and maybe, their phone's not ringing uh, with lease deals or with sale offers. So
Yep.
if people are looking at properties. If you've got a creative use for one of these, and I've seen some of them, to your point, they're kind of a difficult space size to fill.
Yeah,
Uh, they range from 12 to 18,000 square feet,
they're
so it's a little
big.
bit awkward for a smaller
Yeah.
footprint. I've seen, gyms. I've seen one turn into a car dealership.
Hmm.
Seen one turned into a shopping market, with an Asian foods in particular. They seem
Okay.
to be doing fantastic. But there are creative uses, and to their point, this piece I've got up here, I just scrolled through, talking about there's more stores than there are cities with 10,000 people.
Hmm.
But a lot of those stores also, they've got some interesting real estate locations as well. You
Yeah, they're
probably noticed
corner lots and or yeah, busy streets. Absolutely.
right? If the basis is right and you can buy it cheap enough, maybe knocking the building down and putting in something else performing is also an option.
Yeah, I think that's going to be, a very interesting strategy kind of the next 5 years or so. It's buying empty commercial spaces, and I'll talk retail, but also talk office. I think there's some old and tired
Yes,
office buildings in key cities that are frankly not worth they're only worth the land value, right? The tear down value.
100%.
Yeah, so
It's
I think
interesting
there's.
you say that. St. Paul, where I'm at,
Mhm.
especially is facing that right now.
Oh, interesting.
We have a ton of buildings that they've been for sale for a while. We've got a couple of large landlord groups that own a lot of space, but uh, one of them just got condemned. You've got one where even the lender doesn't want it back. Uh,
Oh,
so yeah, there's a lot of cities that are facing that with older office space where the demand is gone, um, and it needs a creative vision to replace it, which is opportunity, right? It's
no,
just
yeah,
what is the
absolutely.
basis?
Yeah, there's going to be somebody out there. Again, I'm closest to San Francisco, right? There's a lot of pain in the city, although I think it might be bottoming, strangely enough, where people are going to buy, 80s built office buildings and find ways to turn them into multifamily units, and they're going to have to get creative, right? Because the footprint or the plate, as they say, not ideal. But damn it, at some point, it just makes sense. It's just at some point it makes sense.
Oh, absolutely, absolutely. So I want to throw this up there because this
Mhm.
sort of highlights, right? This is the last 30 years of construction spending on drugstores.
Look at that. That's
Since
fun.
Census survey, which just came out today on construction spending. I didn't update for today, but they even categorized it down to the type of building that's being constructed.
Mm,
And as you can see, uh, as the construction spending began declining in 2008,
mhm.
Walgreens stock price did go up, and it followed basically that pattern of building more stores. Um,
Yep.
what's terrible for them is they don't have those real estate properties on their books, right? Because they sold them, so they
Yeah,
can't
they're
even
they're they're
write a
leasees, not
bankruptcy,
leaseors. Yeah. Yeah.
right? They can't sell that as a performing asset or useful piece of real estate to get some money back.
Yeah,
And
that's
of
what
course,
Sears and Roebuck did for a long time, right? They were a dying
yeah,
business, but they owned some of they in the beginning they bought everything. They bought the land. So
yes,
they packaged that up, sold it as a REIT and bought another decade of time. But yeah, they've already cashed out.
yeah. J.C. Penney is another great example that's
Oh yeah.
ongoing right now, where they're still in business as they're. I mean, they're not publicly winding the business down, but they are publicly winding down the ownership of real estate.
Yeah, they're
And then
bleeding it
those are big
dry.
anchors too.
Yeah.
So they're really in that same spot. But I
Yeah.
thought this was a fascinating look at just sort of Walgreens and that industry's uh,
Yeah.
fate, right? In
It's
30
pretty
years,
wild, right? Yeah, you actually look at the building stop, which makes the income statement look better for a little bit of time, so the stock shoots up, and then they realize that the game is over and the stock price falls.
right, right. It's that you can't say the same store, sales are up. You can say, but we have more stores, and of
Yeah,
course that's great for business if you have more stores
sure.
until a certain point. This
Yeah,
was sort of like the natural unwinding of one of the longest roll-ups in American history.
no, I couldn't agree more. Right. So, where else does this story go? Where does the opportunity land? And again, is it just find vacant stores in good locations and get creative and basically turn it
Yeah,
into something else?
That's my thought, and I think there's multiple fronts to that, right? If you're a leasing agent, you're a broker, and this is where where some of your skills can come in, right?
Yeah.
To the point we talked about, some of these locations are actually pretty solid spots. They can
Yeah.
be, very high traffic locations or in good performing neighborhoods that the population growth hasn't stalled or isn't declining. uh, Getting creative, finding gyms or whatever you can to fill that space.
Yeah, let me
Um,
let me throw an idea at you, because one of the things I love to do is identify pain, aka opportunity, but then try to
sure.
put together a playbook. Right. So again, this is not a place I play, but if I did, right, if I was a leasing agent or I was a hungry young person, again, what I might do is I might go in and try to write up an offer for this vacant building with some kind of option price,
Yes.
and some time period. Say, you know what? Again, I'm just going to make stuff up. For $10,000, I have a 90-day option to buy this building at some price. And then basically, for 90 days, I'm going to run around and try to find somebody to sign a lease agreement in that 90
Yeah.
days. Probably, give me my 10,000 bucks back in a deposit, if not more, and then go to a bank and get financing, because now I have the purchase price done at a depressed price. I have a lease showing that this asset is now going to be, worth more, and then I go get a bank loan. Is that a creative strategy, or am I missing something?
No, I think that is a creative strategy, and the interesting thing to me is that's a creative strategy in modern day. But you're really talking about fundamentals of the real estate industry from decades ago,
Absolutely.
even before you went out and bought a or built a new building.
Mm-hmm.
And you wanted to get
Absolutely.
financing, you had to have something pre-leased, and you had to show that there was going to be revenue. And a lot
Yeah,
of that came
the banks are not going to finance an empty building. It's just not going to happen.
right. And,
Yeah.
and so you're giving yourself a very good way to reposition this, and without having to commit the capital, other than to your point, maybe a few $1,000s
Yeah.
in a down
For the-
payment or
Yeah, for the option fee. Yeah.
right. So I think that's a great way to go about looking at these, whether it's to you know. Um, either to replace it as a performing tenant. The
Hmm.
other thing is if you're looking at redeveloping something, I would
Yeah.
put together you could put together the same type of creative option, but instead of 90 days, maybe give yourself 6 months
Sure.
and put it pending. If you give yourself 2, 3 months to find a good performing tenant, if you've got a different idea for that spot,
Hmm.
and then city approval on, um, repositioning that.
Yeah.
Or
Rezoning or whatnot. Yep.
exactly. Um,
Yeah.
and then those are potentially great options, especially if you come across a landlord that maybe has 20 plus of these in their portfolio, because a
Yeah.
lot of people did
Yeah,
that.
that's
And
true.
we're
It's funny you bring that up. I know a lot of people that get into triple net as they're kind of winding
yes,
down their portfolio. But to your
right.
point, they typically, I don't know what it is. It's not very diversified. But yeah, there might be somebody. I know one guy that owns 7 Starbucks. I know a
Oh
guy that
wow,
owns three. I think they're Burger Kings, some fast food.
sure.
But yeah, they don't diversify. So it's really like if you owned 7 Burger Kings and 6 of them went bye bye, that would be a
Yes,
bad day. That would be a bad
that
day.
oh, absolutely. That's interesting. You bring that up because even REITs like Triple Net, so NNN as their ticker, they've cut down. They've only got 40 of these right now, and it's a very small percentage of their portfolio. So over the years, they even were going, okay, we need to
We need to
find
get out.
other,
Yeah,
yeah, something else for these. But there's probably a lot of smaller operators that have multiples of these. And
for
so
sure.
to your point on a disrespectful offer, uh, they might be ecstatic to get one of these out the door and be done with it. Because
Oh
maybe
yeah,
they
they're
don't have the same
they're
basis that,
bleeding.
yeah. And
Yeah,
they're expensive. You're talking about nicer real estate, so their tax base is probably not going to go down just because it's vacant. Because when did the cities care, right? They
yeah,
look at it like, hey, it's
yeah,
commercial. We need you to pay for
yeah.
more share than the residents do. So
Yeah, there's no
that's
question. Yep.
a great opportunity there, in my opinion, to get creative in an industry that's feeling some pain.
Oh, I love this conversation. Ulysses, you do a lot of great work for Macro Edge. You do a lot of great work on Extra Twitter. Where can people follow you and dig into this report?
Yeah, so this one I published in the memo.net, which is another publication that I write for. That's thememo.net. And then you can also find my research at macroedge.net. Um, there are both free and paid versions of each one, so you can subscribe and get a look. The memo, I tracked basically all things data points as related to the federal fund cycle as a timeline. And then MacroEdge, we do all types of research there from stock, economic, and just macroeconomics in general. So check it out.
Yep, folks, do yourself a favor, go to the memo.net. Also check out MacroEdge. They do a lot of on the ground research. Ulysses, amazing job. Thank you so much.
Thank you. Appreciate it.
Mhm.